Hello everyone. Very good evening to all of you. I hope you all are fine and preparing well for your exams. Please tell me my audibility and visibility. Is everything fine? Today we have to start our last module, that is module D, marathon of module D, emerging business solutions. Okay, this is the name of the module. Please tell me my audibility and visibility. Confirm me so that we can start our session. Let me check. Yes, everything is fine. Okay. So yes, we have to start module D. Today is the last marathon of all the modules, and from tomorrow onwards, okay, the last 2 days of our exam will be the final marathon, where we will be completing all of the modules all together. In tomorrow's session, I'll be taking module A and module B, and day after tomorrow, C as and D. Okay, the bifurcation of the modules has been done in these two parts. Clear? So now let's start, and I hope you all have joined my not my Oliveboard's Telegram group. Okay, simply you have to write on the search bar at the rate GIB CIB English, and you will be directly add to that group. And how to download the YouTube PDFs? It is very simple. Just download the Oliveboard app and go to the course section. After going to the course section, okay, you will be seeing all of your YouTube class PDFs over here. So with the help of this, with through this, you all can download your YouTube class PDF. Clear? So are you all ready with the very first question of module D? Module D consists of the hybrid finance, startup finance, then AI, sustainable financing, okay, SPAC. Related to all these topics, we are covering the questions, and we will also understand its concept. So just write why so that we can start our today's session. Okay. If everything is fine. Yes, Anita ji, very good evening. Hello. Okay. So yes. Now let's start with the very first question. And you know the process, what you have to do. Before answering any question, write the answer beside it. Okay. Beside it, write the option what you feel. But don't forget to mention the question number. Otherwise, it is difficult for me to understand that which question answer you are giving, because sometimes the comments do come late. So yes, the very first question, what is hybrid finance? Okay, from the starting from the easiest to the difficult level, we will be ending this session. Clear? And we have 75 questions in today's session. 73, 75 questions. So now what is hybrid finance? The word hybrid means what? A type of financing that combines debt and equity. It is based only on equity financing provided by government institution, or it is a financing method which is only used in the countries those who are in a developing stage. And yes, for every question I will give you 5 to 10 seconds. So within this you have to answer the question. Yes, correct. It is a type of debt and equity. Hybrid means what? Hybrid, the word means the combination. A combination of elements. And the combination of two elements are what? One is debt, one is equity. Clear? Debt is what? The loan, and equity is what? The owners. So now, what is hybrid security or hybrid finance? It is a financial instrument that includes all the characteristics of both debt as well as equity, and it also allows the investors to provide with a blend of fixed income, that is debt and equity. Clear? Now, which one of these is not a hybrid financial instrument? Preference shares, convertible bonds, VC funding, debenture with warrants. Which one does not include in the hybrid finance? Tell me. So it is venture capital funding. Okay, it is not a hybrid financial instrument. The venture capitalists are those persons who provide the basic level funding, okay, the seed level funding to the new startups. Clear? But preference shares, the bonds which can be converted into equity shares later, warrants. So all these are what? All these are hybrid financial instrument, whereas option C is not a hybrid financial instrument. Therefore, it will be the answer. Clear? Now, next question. Yes, correct. And please do share this session to everybody. Okay, it's a live session so that more and more bankers will come, they join, and if they feel it is helpful, they also attempt these questions. Okay. Now, a convertible bond allows the holder to convert it. You have heard bonds. Okay. In this chapter, you have also heard what are convertible bonds. So these bonds are converted into which type of instrument? Yes. Equity shares of the company, the issuing company. Okay. These are converted into the equity shares later on. In the initial stage, what happens? Okay. They issue bond, they receive interest on that bond, and later on, if they feel they can be converted into equity shares of the issuing company, that is, they can be the part of the ownership of that company. Clear? How do warrants differ from options? Warrants are traded on exchanges, options are not traded. It is issued by companies, while options are issued by created by investors. Tell me. Options always lead to the issuance of new shares, unlike warrants. So warrants are issued by whom? These are issued by the companies. And options, you have heard the options, swaps, call option, put option. Okay, so these are issued by whom? These are issued by the investors. Okay, on the stock market. So warrants are issued by companies while options are created by whom? By investors. Clear? Yes, yes, Goldie ji. The correct answer is B of question number 3, but the correct answer is also B of question number 4. Clear? Hmm. So what are warrants? Warrants are basically these are a contractual, a legal agreement. Okay, contractual agreement means a contract has been made between two parties, and the holder, the warrant holder means those who are holding the warrant, they are known as warrant holder. So they it gives the right to buy or sell a company's share at a set price, okay, the price which is mentioned in that warrant, and at a specified time period. So it gives the holder either to buy a share, company's share, or to sell a company's share. And these can be used in both the equity financing also as well as debt financing also. Okay, so basically those who are very new to the business, those who are having their own startups, okay, the investors, the new investors, so it is important for them as well. In finance, warrants are these are financial instruments that will give the holder the right. Okay, this will give the holder the right to sell or purchase, but not the obligation. Means it is not mandatory for them. Okay, it depends on them whether they want to, you can say, buy the share or they want to sell the share. Okay, to purchase a company stock at a specified price at a specified time, which is also known as exercise or strike price. This and this, very important. Exercise or strike price. Yeah. No. So all these things we have already done in our paid classes. If you have seen my classes, okay, then you all have must read about all these. Now, what are the features of warrant? So warrant has several key features as well. Okay. So first is they are given the right to purchase. They are not given. They are given only right, not obligation. Means they don't have any kind of liability on them. Clear? They have a specified time also. Okay, at a specified price also. The dilution. Okay, when these the warrants are being given. Okay, when these are issued, these are exercised. New shares are issued. So they will dilute the ownership percentage of the shareholders who are already in that business, because their ownership will get dilute if these shares are being issued as warrant. Dilute means what? They have to give portion of their shares, the existing shareholders. So there are chances for dilution. It is a long-term nature. Okay. Transferability, that is, warrants can generally be bought and sold in the secondary market. It is transferable and it has non-ownership. Okay. It does not get any kind of ownership right until the warrants have been exercised properly in the market. Clear? Now, next question. What is a primary advantage of hybrid financing for business? The advantage of hybrid financing. Hybrid financing, we have seen it is a mixture of debt and equity. Okay, so its advantage is what? Yes, correct. It will reduce the cost of the equity. Okay, so this is the basic advantage of hybrid finance, because we are also, there's a composition of debt as well as there's a composition of equity. So if there is debt also included, then ultimately it will reduce the cost of the equity. Clear? So again, hybrid securities, it consists of both debt and equity. It is a blend of both debt and equity. So these securities are designed to meet specific investment needs that are important for the investors. Now, what are the advantages of hybrid finance? It is a flexibility because it consists of a mixture of debt and equity. So according to your financial strategy, okay, according to your plans, you can choose the debt and equity, okay, at which specified level. Now, risk diversification, yes, with the help of this, risk will be diversified. Means risk may scatter, okay, it will reduce the overall risk of the company, attracting different investors. So hybrid instrument can appeal to a broader range of investors, okay, including those looking for both income and growth. Why? Because it no, not a single instrument is working. Okay, there is the mixture of both equity and as well as debt. So if there is a mixture of all these two both elements, so definitely it will attract the investors. Less volatile market. Why? Because it is flexible, and it higher yield means it will generate higher income, higher returns, income, profit, or returns. Yeah. Now, the company issues bonds with a clause allowing conversion to shares after 5 years. This is an example of pure equity, convertible bonds, callable bonds, or debt restructuring. See, if you will see one word in this particular statement, you will see one word, that is allowing conversion. So when do we allow convert? Okay, when we permit the conversion. In the case of convertible bonds, convertible debentures, it is written bonds, then it will convertible bonds. If in the question it is mentioned debentures, then there will be convertible debentures. Clear? Option B will be the correct answer. Yes, correct. Now, why might a startup prefer angel investors over venture capital funding in the early stages? Early stages means in the initial stages when the business has been started. Okay. Why we prefer angel investors? We can also prefer venture capital. We can also prefer private equity. Why we only prefer angel investors? Angel investors, they demand lower returns. Venture capital firms invest primarily in ideas, while angel investors, they require profitability. They often provide smaller investment with less stringent control, and venture capital funding is a risk free. Yes. Correct answer, Anita ji. You have given the correct answer. That is C. What happens? Venture capitalists, what they do, they if they invest in your company, okay, they take a part of your company, they take the ownership in your company, and they are risky. Okay, because they invest only in such kind of business who will generate a huge profit. Okay, whose reputation, whose goodwill is good in the market. Whereas angel investors are those investors. Okay, the angel investors, they provide small investment, okay, in a pieces of investment, and their control is also less. Means they will not take the much ownership the venture capital takes. So they have a less control. Okay, their rules and regulation are also not very strict, not very stringent. That is why many startup, they prefer angel investors. Yeah. Now, so what is venture capital? It is a type of private equity financing that is provided to early stages with a high potential start. Okay, if I know that your business model has the potential to give me higher returns in the future, then only I will invest in your business. Okay, I will take a huge portion of your business as a ownership. So they invest in the different firms, individuals into startups in exchange for what? In exchange for equity. And what is equity? We all know that is ownership in the companies. Clear? And what is the purpose of this? The goal is to provide funding to the companies that have the potential growth, and they can, if they have a potential growth, then definitely they will give high returns to investors. Clear? Now, and what are angel investors? Angel investors are wealthy individuals who provide capital to promising, they provide capital to early stages business. They also exchange a portion of their equity, but not as much higher as the venture capitalists. So they provide seed capital, okay, or early stage capital funds to the early stage business. Suppose this is entrepreneur or early stage business. Okay. And this entrepreneur will give angel investor a part of their ownership equity. In return for this equity, they will provide what? Funds. This is how they work. The return on equity shares is known as interest, dividend, profit margin, or capital repayment. The return on equity shares, it is dividend. Means return on equity shares, what they get in return of, they have um, they have given a lot of time, a lot of finance in the company. So in return, what they get? In return, they get profit, and that profit is given in terms of dividend. We provide dividend na, to our shareholders. Shareholders are given what? They are provided dividend. Clear? So option B will be the correct answer. Now, which of the following is not true about equity shareholders? Tell me. Which is untrue? They bear the highest risk in a company. Yes, correct. See, in the previous class, or in our second module, I have taught you that there are two types of shareholders. One are preference shareholders, and the next is equity shareholders. Clear? Preference means what? See, from the word preference means you are giving more preference. So when a company earns a profit after paying all its debt, okay, after giving all its interest to the bank, the debenture holders, their interest, after giving all these things, okay, whatever money is left, first the money is being given as a dividend to these preference shareholders. After that, whatever is left, that will be divided among equity shareholders. So, which is not true, it is asking. So, preference shareholders are given a dividend and their dividend is fixed, whereas equity shareholders, their dividends are fluctuating. Okay, depending upon the market condition, how much profit a company has earned, according to that profit, they will be provided the dividend. So, they receive a fixed return. That is the wrong statement. They bear the highest risk. Yes, that is why they are the owner of the company. They have residual claims over profit. Yes, if any extra bonus or any residual money has been left in the company, so those profit will also be given to divided among equity shareholders. They have voting rights. Yes, this is also correct. So which is not correct? Option number C. That is a fixed return. Clear? Now, if a company issues 10,000 equity shares at 100 each. So total equity raised is how much? Very easy question. Very, very easy question. What कर्मा कर्मा जी yes आपको क्लास की पीडीएफ आपको just a minute I have in the initial when I was starting the class just see. Is the slide visible? Okay, just wait for a few minutes, rest of the people. Is this slide visible to you all? Okay, simply what you have to do is you have to download the Oliveboard app on the phone, okay, on the phone or on the system. Go on the course, select this section. Okay, in this courses section, if you will scroll down, you will see the YouTube class PDF. So there the PDF will be uploaded. Okay, all the YouTube classes, and you will be seeing all the PDFs, and simply what you have to do is download it. Clear? In this way, you can download the PDF. I hope it is clear now. Okay, now let's move to the question. Yes. Okay, both of you have given the correct answer. Simply, how many equity shares are there? Company issues 10,000. Okay, and the one equity share, the rate of one equity share is 100. So 10,000 into 100, you will be getting 10 lakh rupees. Okay, okay, you have iOS. I need to ask to the technical team. Just let me take the screenshot of your messages. Okay, I will ask them and I will convey the same to you in tomorrow's class. Chalo, let's move to the next question. What is financial warrant? We have studied few minutes ago the financial warrant. What is that? A type of debt security, a document, you can say a legal document, contractual document, a certificate of deposit, or government issue bond. Yes. Okay. So now tell me the answer of this particular question. Yes. Option B is correct. We have studied just now what is financial warrant. It is a contractual agreement, okay, where the holder is given the right to purchase or sell the shares of the issuing company. Hmm. If a warrant has an exercise price, tell me what is the other name of exercise price. First of all, tell me this and then tell me the answer of this question. Of $10 and the stock is trading at $15. Means underlying asset value is given $15 and the exercise price is given $10. Now you have to find the value of the warrant. But before that, tell me the other name of exercise price. Yes, correct. That is strike price. Okay. Simply, there is a formula of the value of the warrant, that is underlying assets. Okay, that is the stock which is on trading minus the strike price or exercise price. So how much is there? 15 minus 10, that is 5. And the sign is of dollar, simply put the dollar sign. Clear? So option A will be the correct answer. If you want to see the formula, here is the formula. So exercise price is the price at which the holder will can buy the shares of the company. It is also known as strike price. The underlying asset price or the stock in trading minus strike price. Clear? So 15 minus 10, that is 5. Clear? Easy question. Now, what is the strike price of a warrant? So yes, stay connected with us. Today we have 75 questions to complete. Let me say how many questions we are having today. Okay, we have 74 questions. Now, tell me the answer of this question. Question number 13. So we have seen just now that the price at which holder can buy the shares of the company, okay, using the warrant, that is strike price of a warrant or exercise price of a warrant. Clear? We have seen now at which the holder can buy a company's share. The price at which holder can buy the shares using the warrant. So this will be the correct answer. Clear? The initial issue price of the warrant, this is not a strike price. It is telling the initial issue price, means at the starting, if you will issue the warrant, what price you will going to take in that case. Okay, so that is the initial issue price, not the strike price. The strike price is the price at which you are going to buy the shares of the company. Clear? Now, mezzanine finance or mezzanine finance, okay, is typically used by. Tell me the answer, then I will tell you the concept of this mezzanine finance. Startups with no revenue, large companies who have to use their funds in their daily operations, companies looking to fund for expansion or for acquisition purpose, or it is a government project fund, government for public project. Yes, correct answer is C. See, what happens in mezzanine finance? Okay, simply suppose you have taken a loan on 1st January 2024. Okay, for 3 years. It means that you have to repay your loan where in 2027 you have taken a loan for 3 years. Now you need to repay your loan plus principal plus interest on 1st Jan 2070. But for some reason you are unable to do that. Now what happened? The Mijine Finance, what this will provide you that okay, you are unable to repay my money. Okay, now in that case, your interest or your whatever loan you have taken from us, okay, these will be converted into equity shares. Now you have to act as the equity shareholders in my company. So whatever the risk will be there in our company, it's not that always the company will make a profit. There will be loss also. The risk also have to bear all the shares among the shareholders. Now this risk you also have to bear in that case. So this is Mijine Finance. Okay, in case of default, the all the loans, all the money will be converted into the equity shares. Clear? So this is the concept of Mijine Finance. So it is basically used by companies looking for expanding with the help of this. If the shareholders' wealth is more, okay, if there are more shareholders, definitely there will be more acquisition because owners are the one who does this kind of work, the acquisition, amalgamation, mergers, okay, for expanding new business. So they have to bring a lot of money in that case simply. So that is why Mijine Finance is used for expanding purpose or for acquisition or merger purpose. So now this is Mijine Finance. It is again a crucial concept of corporate financing, which is looking for the growth with capital without diluting ownership too much. Now in this case, what happens? The one who has made the default, he or she will not get that much ownership the existing shareholders are having. Clear? It is a type of funding that sits between traditional debt and equity. Another type of hybrid debt and equity financing that gives the lender the right to convert debt into equity means the lender means the right to convert the debt into equity in the event of any kind of default or in the event of when the repayment has not done. Clear? Tell me. It is clear to you? So it is often an unsecured debt means no security is given in case of in such type of in cases of debt, and it typically matures in more than 5 years. So this is the proper all the important points regarding to Machine Finance. Clear? So take the screenshot or you can simply download the PDF the way I have told you. Now, company raises Machine Finance by issuing a convertible bond. This bond can be by issuing a convertible bond, company raises the Machine Finance. If the fault has not been repaid, okay, if the debt has not been repaid, then it can be converted into equity shares. Yes, it can be converted into equity after a predetermined at a predetermined price and at a specified time. Okay, after 2 years, 3 years, whatever the time may be defined in between them. Now, what is the formula for calculating the conversion price of a convertible debenture? Here it is talking about convertible debenture. Total debenture value by conversion ratio by total debenture value. Tell me. Yes, it is total debenture value by conversion ratio. Okay, okay, forget this part. Convertible debenture. What is the formula of conversion price? Tell me. What is the formula of conversion price? What on what? It is par value upon conversion ratio. Clear? So, if we need to calculate the conversion price of convertible debenture, so what will be there? The debenture is there. It means debenture par value or debenture total value upon conversion ratio. When I say this, if because of debenture, it is in the question, it is being asked of the debenture. If in the question, it it is asked of the bonds, then simply debenture par value, the bonds par value upon convertible ratio. Am I clear? Tell me. So option A will be the correct answer. Clear? And if we need to find the conversion ratio, so what will be the formula? What will be the formula? Just do the simple mathematics you have to apply. The par value upon conversion price. Clear? Yeah. So conversion ratio and conversion price. So ratio and price are both terms that are related to convertible securities. What is conversion ratio? The number of common shares a bondholder receives when converting a convertible security. Means when you are converting, okay, when you are converting on any kind of security, the value the you are getting back means the number of shares you receive when you are converting on any value, that is conversion ratio. And what is conversion price? That is on what price? The price at which a convertible bond can be converted into shares, equity shares, preference shares. So it is conversion price. At which price? For example, if I want to convert my convertible bond into equity shares, okay, so one bond will be of, let's say, 15 equity shares. Okay, the value of one bond, if I want to convert my one bond into equity shares, I need to pay rupees 50. Clear? So this is what this is a conversion price. The price at which the convertible bond can be converted into equity shares. Clear this concept? Now, which of the following is a characteristic of PE investment, private equity? Typically involves minority stakes, focuses on high growth startups, control of the company. Tell me. And please, everybody, like this session, subscribe the channel, and share it with others as well. So it is option number B. It takes the control over the company. The private equity, the characteristics is what? It typically involves minority stakes. No, not minority, a majority. Takes control over the company. Okay. Focuses on high growth startup, often involves short term horizons. So this is the primary characteristic of private equity. There, then this will be the answer. If the question is which of the following is a characteristic, then I can say this one is also the answer because they focuses on those type of startups, the potential startups. Yeah, clear. See, why not C? Because okay, I have forgot one word, that is primary characteristic of private equity. So if I say the characteristics, then yes, this can also be the answer, this can also be the answer, but it's a multiple choice question, so we have to take the most we what is the most priority, we have to choose that answer. Okay. So primary characteristic, if I say, it is usually takes control over the company. Here now, okay, so these both are the correct answer. If only characteristic is given. But if I add a primary word over here, then yes, the first priority is to take the control of that company. The growth is later on it comes. Okay, whatever, see, firstly person thinks about himself or herself. Then only he or she will do the social for social benefit. So that is for the first is for the ownership of the country. sorry, ownership of the company, and then the second one is for the growth of that company. Now, so what is private equity? Okay, it refers to investment funds that acquire equity ownership in a private companies or conduct. And let me tell you, these venture capitalists, private equity, they only invest in private companies. The companies which have been listed on a public company, okay, listed in a public company, they will not going to invest on such kind of company, so resulting in their delisting from public stock exchanges. Means the company should be delisted from public stock exchange, then only they will invest in such companies. So these funds typically involve high net worth individuals, HNI. Clear? Aim to improve the acquired company, they improve their financial performance, okay, the strategies, the plans, so that the company may expand and grow. And after a period of growth and value enhancement, these private equity firms usually exit their investment. See, what did these people do? Okay, first they will enter in the company, okay, with the intention of earning a huge profit and taking a ownership of that company. Then whatever the further improvements are required in that company, they will do that improvement. They will tell them different strategies, different plans, how to expand your company, how to make your company, how to create a goodwill in of your company in the economy. So all these the required improvements they will perform in that company. Then after that, they will sell the company to the other company, and after selling, the whatever the returns they are getting, they those returns are their profit, and after that they will take a exit mode. So this is how they enter the company, and they take a exit mode. So private equity and venture capital, they only enter in those companies who have the exit mode. If any company does not have the exit mode, they will not going to invest in such companies. That is why they have a very experienced holder, because they have worked in many different types of companies. Now, which of the following is a common exit strategy for venture capitalists? How they take the exit from the company? What they offer? Yes, with the IPO, that is initial public offer. With this, they exit the company, the existing company. Okay. They issue IPO, that is initial public offer. They raise IPO, and with this, they take a exit mode. An IPO, initial public offering, is the term for the first time that a private company will sell its share to the public on a stock exchange. Okay, it is the first time. That is why it is known as I stands for initial. You have seen many different companies IPO is coming. You might be hearing all these things in your daily life. If you are little bit related to the stock exchange, okay, if you are interested in such kind of shares or stocks, then you have heard all these things. Now, what is the key difference between venture capital and private equity? Okay, see, basically there is no difference between these two companies, only a slight difference is there. Rest everything is same. What is that slight difference, or what is that minimal difference? That is, we see venture capitalists, they focus comparatively with PE, they focus on early stages, okay, and PE focuses on the established firms. Comparatively to this, they focus on early stages. But on a very early stages, the angel investors are good for them. Yeah. So correct option is C. Now, so this is the difference between these two. So you can later on you can read these differences. Clear? So there's a early stage of investment is early stage. It is a bit a later stage. It targets several small firms. It targets several few companies only. 4 to 7 years. and it takes almost 6 to 10 years in that company, okay, for entering to exit. Now, primary goal of startup financing. What is the primary goal? It is to secure funds for initial operations and growth. So, startup financing, what is the primary goal? That is for their operations, they need fund. Okay. And with the help of this fund, the companies will grow and expand. Clear? So, yes, B will be the answer. Now, what is bootstrapping? You have heard this word in the Shark Tank many times. Have you seen Shark Tank? Any episode? Any of the episodes? Yes, bootstrapping means your own money. That is self-financing or using your own personal resources to fund the business. See, in early stages of business, okay, many people they scare of investing in your business. Why? Because you are having a very early stage business. So yes, everybody will be, even if you were in their place. So you will also be get scared that if I invest in such companies, okay, I will not get any kind of return. So there might chances of loss in that company. So you will also be having loss. So bootstrapping is that your own money, your self financing, whatever personal savings you have kept. Okay. So then with the help of personal savings, you can use in your business to expand and grow. So it is known as bootstrapping. Clear? Now, which stage of startup financing is typically funded by angel investors? Just now we have done this. It is a early stage business. That is early stage business means what? A seed stage. Okay, seed is what? It is a very early period of becoming a fruit. So relate to this in manner. The angel investors also they invest in a very early stage. So early stage is related to a seed stage. Now, equity financing for startups involved. For the startups, equity financing helps in what ways? With the help of this, they will sell the shares, and with the help of selling shares, they will raise the money. So, selling shares of the company to raise capital. Clear? Yes, correct. B. Now, crowdfunding. Another new word in the startups crowdfunding. If you will break this word, you will get two words. First is crowd, and second is funding. And if you are aware with this word, crowd means what? Then you can simply find out the answers. Today, only two people are watching the video. Why so? Yes, raise small amounts of capital from a large number of people. Crowd means what? A bheed. If you will, okay, so you will, uh, what you will arrange the capitals, okay, arrange the fund from your family, say, okay, from your relatives, from your peer members, then, then what? From your friends. Okay, so these are all the crowd, and if they will support you, if they will give you funds, so if you will, and in such manner, if you will arrange the funds, that is called crowdfunding. So raise small amounts of capital. Okay, it's not that the family, relative, peer members they will provide you huge capital. No, they will give you small amount of capital, but the number of people there will be large. Okay, you can also arrange from your, you can say colleagues, okay, from your boss. So in such manner you can raise the small amount of capital. So this is crowdfunding. So crowdfunding is what in which individuals pool small amount of money from large audience to support their business. Traditional funding is large amount from one or few source, whereas crowdfunding is small amount from large group of people. Clear? Yes. Let's move to the next question. A startup raises funds by selling 10% stake in the company to an investor. If a startup raises funds by selling its stake, its share to a company in the company, this is an example of what type of financing. Yes, it is a type of equity finance. Okay, we raise capital with the help of equity. That is, a startup raises fund by selling its ownership in the company to the investors from where they are asking the money. So that is in the term of equity finance. Now, if a startup receives $1 million from venture capitalists in exchange for convertible preference shares, this means, again, question is large, options are also large, but question is very easy. Any startup company, if they receive $1 million from venture capitalists in exchange of their convertible preference shares, means those preference shares which has been converted into the equity. Okay, somehow or in some manner at a specified time they have been converted into equity shareholders. So this means what? The startup has borrowed a loan, the venture capitalist has purchased shares that can convert into common equity later, may repay 1 million with interest, or it owns the startup. Yes, correct answer. It means that the venture capital is purchasing the those shares which can be converted into equity later on. The convertible preference shares means that can be converted into equity. Now, which financial metric is most important for startup investors to assess growth potential or to assess the expansion of the business? Net profit margin, customer acquisition cost, debt to equity ratio, or working capital turnover. It is it is asking the financial metric for assessing the growth of the company. Okay, you are saying net profit margin. See, net, okay, if I say net profit margin can tell us the growth, but do we need a growth for 1 year only? Profit, how you will assess the profit? Annual profit will be assessed after the financial year closes. Then only you can assess the you have a growth or not. Then only you can assess the growth potential. Tell me, after the end of the financial year. Tell me, those who have said option A, I'm asking you one question. It is in the question, it is being asked the most important. It means there are many options that are important. There are many options that are important, but the most important you have to find. So the growth can be assessed after the end of the financial year. Clear? So we don't know that in 1 year if we are having a profit, then in the second year we are also having the same profit or the more than profit. In the third year we are also having the profit. It might in the third year we will suffer with loss. So this can't assess our growth potential. What assess our growth potential is our customers, the clients. Okay, how many customers we are retaining, how many clients we are retaining in our company. That will assess the growth potential. So customer acquisition cost. Here, how much you are investing in order to retain your customers, in order to retain your clients, that will assess the growth potential. That is the most important for the newly startup, because newly startup investors, they don't know about profit because they are entirely new. The one who has already have a experience, those are having company of 10 years, of 12 years, they can assess the with the help of profit. But the company which is entirely very new, okay, they can only assess the profit with the help of their customers. The more the customers they are taking, the more the profit they will generate. So customer acquisition cost means what cost you are giving in order to acquire the customers, in order to retain the customers in your company. Clear? This is for early startup companies. Now, question is related to some programs, some yojnas in the startup. Okay. The National Startup Awards were established to, so these are all programming part, because every yojana, every program, what its main objective are, you have to learn those things. So National Startup Awards were established to, yes, correct answer. It is recognize startups in emerging technology field and impactful sectors. So startup, it is mainly established to recognize those startups which have been immersed in the field of technology, and with that they have the being impacted those sectors in a very positive manner. The Inspire program by the Department of Science and Technology focuses on Inspire program. It is promoting innovation through awards and grants for students and researchers. Okay, promoting innovations, new ideas with the help of rewards and grants for students and researchers. Those students who like IITs, okay, triple ITs, IITs, IIM. The students studying from this type of institute, their IQ level is high. Agree or not? Their IQ level is high as compared to those who have been studied from a normal college. So for these, if they are doing anything innovative work, then definitely grants will be provided for them for doing proper R&D, research and development. So this program, it is initiated by Department of Science and Technology. It promotes in innovations, and it also helps in providing grants to students for researchers. Okay, those who are researching new things, those students uh, who are making new ideas, innovating new ideas, so it helps in the promotion of those. Now, and also tell me this, the full form is also important. The full form of Inspire. What is the primary feature of the Insolvency and Bankruptcy Code 2016 that benefits startups? Basically, this initiative has been established for what purpose? What was the reason behind this? So that they can create the benefit for start. Tell me. Yes, establishing a time bound process, a time is being mentioned over here. Okay, time limit is being given for resolving insolvencies. Startup India Yatra focuses on. Question number 31. It is conducting outreach programs to nurture entrepreneurial talent in Tier 1 and Tier 3 cities. So, what is Tier 2 and Tier 3 cities? Anybody of you know that? Tier 2 and 3 cities. See, Tier 1 cities, major hubs for business, politics, and culture. These all comes under the Tier 1 cities. Tier 2 cities that are identified as a part of the Smart Cities mission. Okay, in this mission, those cities are working under this mission, okay, under this scheme. They are being initiated under Tier 2. Okay, they're being included under Tier 2. Now, Tier 3, population and economic growth have recently been significant in smaller cities. Okay, the growth of population as well as economic growth. And in which type of cities? The cities who are very small, they have low economy and low population. And Tier 4 cities, these cities are located in the village area, the rural areas, and remote areas, and typically not connected to other parts of the country. So in Tier 4 cities, all these type of cities are included in such type of Tier 4. So Startup India Yatra mainly focuses on all the programs so that different types of programs related to new startups, related to development of the economy, development of the industry, so they can also reach to these cities to nurture all the entrepreneurial talent. See, basically what happens, you will find that in many rural areas or in many backward cities there are also a talent. Okay, many young or teenagers, they will also having a talent as compared to our. So in order to catch those talent, okay, in order to, you can see, in order to nurture entrepreneurial talent in Tier 2 and Tier 3 cities, so this Startup India Yatra focuses on means they will, okay, they will pick up those candidates, they will pick up those students, those teenager boys and girls who are very talented, who can develop innovative ideas, who have sharp mind, so that they can help in the development and expansion of the country. Clear? So for this, yes, urban and semi-urban areas. Now, student with a science innovation project applies to Inspire. Okay, we have seen Inspire. What kind of support can they expect? We have seen one word over there. If you grant the mentorship and grant for further development to students and the researchers. Clear? So option B will be the correct answer. Yes, B. Which program organizes the grand challenges to promote technology based solution for pressing societal problems? The problems which are occurring in society, okay, in order to resolve those problems. So basically, we need to promote technology so that these problems can be resolved with the help of solutions provided by with the technology, with the help of technology. So which program initiated grand challenges to promote technology? Yes, Atal Innovation Mission. Okay. Now, the grand challenge under the Atal Innovation Mission typically targets, in which type of field they target for societal problems. So they basically solve the problem, they resolve the problem related to national global challenges. Okay, in sectors like healthcare sector, agriculture sector, AI sector, okay, transport sector, then digital sector, for solving national and global challenges. Which language some questions related to AI. Which language is commonly used for AI programming? AI is what? Artificial intelligence. So which language is used in this? Python, HTML, SQL, PHP. Correct. It is a Python. Okay. Now, can you tell me all of these full form? HTML, SQL, PHP, the full form. Don't need to tell all the definitions related to this. Tell me just the full form. Okay. Or I'm writing. I'm waiting for a few seconds. Tell me. Yes, hypertext markup language. It is basically used for designing web pages. Correct. Hypertext markup language. Next, SQL. It is structured query language. And PHP, I guess, it is hypertext preprocessor. Hypertext preprocessor. I'm not confirm about this. It is hypertext. But HTML is hypertext markup language and structured query language. Clear? And which language is used in AI? That is Python. It is correct. Now, what does a chatbot use AI for? Chatbot. You have seen everywhere. In WhatsApp also, in Telegram also, the chatbot. Yes, correct. It is to interact with the users and whatever their queries are, you have to respond with their queries by using the chatbot. Simply, whatever your queries are doubt, simply you type on this on the chatbot and it will generate the answers. Voice assistants like Siri are example of voice assistants like Siri are examples of. I'm not going to say this name, otherwise she will speak up. I have connected this. Yes, these are natural language processing, that is NLP. Which industry uses AI for fraud detection? Banking and finance, agriculture, manufacturing, or education? Yes, banking and finance. Okay, this uses artificial intelligence for detecting any kind of fraud. Now, next question related to again venture capitalists and private equity. Okay, what is dilution? The meaning of dilution in context of startup financing. Reduction in total number of shares, increase in the value of the company, decrease in existing shareholders' ownership percentage, or improvement in cash flow. Correct. Decrease in existing. See, dilution means what? Diluting. Means some of my shares have been given to you. I am a shareholder of any company. Okay. and a new shareholder comes or joins the company, he has become an equity shareholder, then the one which is being distributed among 30%, okay, it is distributed among six people, and every people is being given 5%. Now this 30% will be distributed now among seven people. So it means I have to decrease my ownership, my percentage, in order to give some percentage, some ownership to this person, the seventh person. So it is decrease in the existing shareholders ownership percentage. Clear? Option C will be the correct answer. Now, which of the following best describes machine learning? Machine learning. Machine learning is what? The domain which is used to make intelligent machines. Is machine learning. Clear? Or deep learning. No, it is B, a type of AI that stimulates human thinking. Okay, tell me if you're saying a subset of AI, okay, it means machine learning, okay, it is a subset of AI. Till here it is correct, okay. I will also agree on this. That uses statistical techniques to give computers ability to learn from data. Okay, tell me, this cannot this simple computer also does this kind of work? They uses data, you will provide the input to the data, the all the functioning will be done in the computer, okay, inside the brain of the computer, that is CPU, and what it will give you in result, that is the output. So can the simple computer also do all these functions? Do, but if the question it is being asked, the machine learning, and machine learning we know that it is related to what? AI. So AI, what AI refers to the replication of human minds or human intelligence in the computer. This is what the AI is. Can't we say that option B is the answer? A type of AI that stimulates human thinking. Can we say now? This is more appropriate. Till over here to here, it is correct. It is a subset of AI. It that uses statistical techniques to give computers the ability to learn from data. So all these works a simple computer can also do. So what is the unique in this case? It unique is that it stimulates human thinking. It is the replication of human thinking. Clear? So that is why option B will be the correct answer. Now, so machine learning process is what? First of all, the data which we will provide to this machine learning. This will train the data. Okay. Train means it will check that whether the data related to your input is correct or not. After that, proper algorithmic functionings it will be there, just like what we do in case of just a minute, let me change the color of the pen. The functioning in algorithm, the functioning same which we perform in arithmetic logic unit. Remember in ALU, what functions does we perform? So all the addition functions, all the mathematical functions, the arrow, the subtraction, the multiplication. So see, same in the terms of AI, it will perform all the algorithmic function, log, and all that. After that, it will learn. Okay, it will derive the result. Then they will train the model for getting a proper result. After training the model, the result will be published. And with the help of this result, you will analyze that whatever data you have given to this machine learning, do the do the same output you have got or not. If not, then again you will train the data, you will train the model. Okay, you will apply different model. If the model is not working properly, you will apply the second model, you will apply the third model, means different models, unless and until you will get the desired result. Clear? So this is how machine learning process works, a deep learning. Now, AI in healthcare often use convolutional neural networks, that is CNN, for what? It is talking about healthcare. Neural networks, you have heard this word in the AI. You know this word neural networks. We have nerves in our brain. We have the nerves in our brain, and these nerves help us to perform the all the functioning of the brain. Suppose if we touch a hot key of a hot cup of tea, okay, if if we touch this hot cup of tea, frequently our nerves, our brain will function and we have to remove our hand. It will say, no, it is very hot. Then you remove your hand. But it does in a few fraction of seconds. Then you can't calculate that the time. So similarly, in the AI also there are neural, okay, nerves. They connect with each other. They form different modes, and these modes together form the network, and in such way they perform all the activities of the artificial intelligence. So it is basically used for diagnosing disease using image data such as x-rays or doing MRIs. Clear? Ethical AI. There's a topic ethical AI in your syllabus. What does it mean? Maximize profit from AI technologies, ensure that AI system operate in ways that align with human values, means that match with human values, or in that go together with human values. Ethical, moral values. This is what ethical means, the code of conduct. It is ensuring that AI systems operate in ways that align with human values, okay, their traditions, their cultures. What is AI and morality? AI and morality, it is a complex and evolving topic that will tell you all the ethical implications of AI. It includes the decision making process from the healthcare to criminal justice. It is bias and fairness. If you will give the biased data, the output you will be also getting the biased. If you will give the fair data, the result will also be the outcome will be fair. Clear? So it can perpetuate or amplify the existing biasness in data, leading to unfair outcomes. Autonomy, it is independent, it does not need anyone else. Okay, ethical questions arise about their decision making capability. Privacy, yes, data is private. Okay, in some cases, there is data theft also, where the private data leaks. So AI technologies often rely on vast amount of data because, see, AI is a bit big than the normal computer system. Okay, the normal internet. So definitely, it needs a lot of data for um, optimizing desired result. So it raised concerns about the privacy and consent. Clear? So if the data is not private, then it is unethical. If the data is private, then they are following the ethical considerations. And job displacement, yes, with the invention of this AI, everything is being automated. So there are losses of jobs. AI can lead to job losses, prompting discussions about the moral responsibility. So it is the duty that if everything is being automated, if you don't require any kind of person, okay, if the requirement of persons are very less, you need to shift those persons, mm, to another job by providing them proper training. It is the moral responsibilities of the companies and governments to support those displaced workers, those have been lost their jobs in case of AI. See, everything is being automated. Okay, all the things. So soon a time will come when many of them will be facing this kind of problem. Yeah. So this is AI and morality. Now, sustainable financing. What is green finance? Tell me, green finance. Correct. It is financing for projects aimed at improving environmental sustainability. Green finance means we are financing, we are investing on those projects which leads to sustainability. What is sustainability? It means what we are using today, the present generation should not deplete all those things. It should be left for our future generation as well as. Okay, the resources should not be used in a drastic manner. It should be used in a proper manner so that our future generation may also see those resources, may also use those resources. So it is called sustainability. ECG criterion. What is ESG? Environmental, social and governance. ESG. Environment, social and governance. It is a set of regulatory requirements for corporation, A rating system, evaluate a company's environmental, social, and governance performance. Related to environment means we should not provide harmful reactions to the environment. Okay, everything should be harmless. On the other hand, no, whatever we are investing in such, we should invest in such kind of projects which should be against anti-social. That is, it should promote social welfare. And governance performance means all the rules and regulations should be of the governance. That is, if government permits, then we can go for this. If not, if government poses any kind of restriction, we have to think on it twice. So sustainable in this environment, ESG. Okay, so in environment, it includes what? From here, natural processes to climate sustainability. These are the part of you can say environment. In social, human capital, value chain, community, the people, the diversity. Okay, different cultures, geographical areas. And in governance, the risk management, the anti bribery, corruption. Okay, corporate governance, transparency. Data should be transparent. That is right to information act. You have heard this is happening. RTI, right to information act. Here now, question number 45. Green bonds are primarily issued to finance projects that green bonds. So that promote environmental sustainability. So green bonds are primarily issued to finance those projects which help in the betterment of environmental sustainability. Clear? Now, which of these is a key feature of SRI, socially responsible investing? 46. Only investing in companies with high profit, avoiding investment in companies that harm the environment, focusing solely means alone on financial performance or ignoring social impact. So if you're talking about socially responsible investing, so this would never be the answer because it is giving a negative impact, a negative statement. So if we talk about socially responsible investing means the investment should be done in such a manner that we should whatever we have taken from the society, we should be responsible for that. Okay, we should pay the society back. We should pay back the society. And how we can return in terms of CSR, that is corporate social responsibility. Okay, avoiding investment in companies that harm the environment or society. So this is the key feature of SRI. So we should avoid those investment which may provide a harm to the society. Which of the following is a criterion for a company to be considered as an ESG focused? ESG focused. We have seen in governance there was one word, and that word will help you in finding the answers. Yes, correct. That word was transparency. If you have seen this properly, see the transparency. है ना? Chal. So option D will be the correct answer. Transparency in government and management. Now next question. Next question is related to SDGs, that is Sustainable Development Goals. What does the concept of SDG refer in the context of financing? If you have learned all the 17 goals, then it would be easy for you. Tell me. Three, four people are watching the video. Only one person is answering my questions. You all should also answer the question. Yes, correct. That is aligning investment with the global goals. What are the global sustainable global goals? There are total 17 goals. Okay, to reduce poverty, inequality, environmental degradation. Okay, we should avoid the all the inequalities between men and women. Okay, combat all the health issues. So these all are included in the 17 goals of SDGs. One major challenge in implementing sustainable financing is what is the challenge that everyone faces in order to implement such kind of financing? Lack of demand for green products, limited innovation in the environmental technologies, the difficulty in measuring and reporting ESG criteria accurately, or excessive government regulation. See, this statement will never be correct. Why? Because government is also working very hard in order to promote sustainability. Okay, excessive regulations on government regulations will never be excessive on sustainable type investment or on sustainable financing. So this is entirely wrong. Then lack of demand for green products. Okay, tell me this statement is correctly matches to this question. Lack of demand for green products. That is why it is very difficult to implement. Tell me what lack of demand? There is no sense of this particular statement. So this is also rejected. Now, limited innovation in environmental technologies. If any innovation is being made in on any particular activity on any particular technology, then how that will be a limited? That will not be a limited. Na? That will entirely new for them. So one major challenge is that the difficulty in measuring ESG criteria and reporting ESG criteria accurately. You need to analyze all the data. Okay. See, our country is very big. Okay. We have approx population of how much? We have crossed China, na? We have approx 150 plus crore, 150 crore plus population. So every data related to every city, okay, every channel, so it is very difficult for us to maintain that. So reporting and measuring all the criteria following ESG criteria accurately, so it is difficult for implementing the sustainable financing. Yeah, now SPAC. It is a short chapter but important chapter. And very important chapter is which one? Tell me. Private equity venture capital. What is SPAC? Special Purpose Acquisition Company. So I guess you know the basic objective of this SPAC, why this company has been formed. Do you all know that? Tell me. If you all know, then I will move on. Otherwise, I will explain you. Yes, it is a company formed for a specific purpose, such as acquiring another company. Clear? What is basically SPAC? Okay, I will give you just an overview of this. Those who are unaware of this, yes. See, these companies, they don't have their own existence. Okay. They don't have their own existence. They are only made just for the purpose of, just for any specific purpose. To fulfill any specific purpose, to fulfill any specific criteria, these companies has been formed. For example, if let's suppose, let me turn off the camera. A is company and B is company. Okay. The investors, okay, they are giving funds, okay, they are providing, they are investing in this company. A company is um, issuing its IPO, okay, and investors, these are investing in such kind of company. This particular A company wants to acquire this B company, a target company, but this A company does not have many people, okay, this A company is busy in his own work, so to have any other person whom he should take, whom we should target to acquire this kind of company. So A has made a new company, A has formed a new company named SPAC, and this company is, let's say, C company. Okay. So the duty of C is what? To analyze all the requirements of the target company. Okay, what A company needs from this target company. This C company will see all the availability of B company, analyze all its performance, all its growth, the previous year trend, patterns, everything. And if everything is good, this C company will acquire B company. Okay, if the proper acquisition has been done within 2 years, okay, if AB has been acquired by C and C will transfer all of its the, you can say, the shares, the money to A, then this company will be dissolved. Okay, so this company has only been formed in order to acquire another company, in order to acquire the target company. And once its work has been done, the IPO has been raised by investors, its work has been done, then this company is being liquidated. If within 2 years, okay, the SPAC has not performed its work, then they have to return the money which they have taken from the investors. Yes, maximum time period is 24 months. That is 2 years. Because 1 year consists of 12 months, 12 months, that is 2 years. If within this 2 years the performance is not done well, okay, they have not acquired the target company, then the SPAC company has to return all the what all the funds, okay, which they have taken from the investors, they have to return it. Clear? So this is how they work, the SPAC company. Okay. Today we don't have enough time to explain each and every concept. So I have just given you the overview of this. I hope it has been clear to you. So it is formed for a specific purpose. Now, so special purpose acquisition company is a shell company, okay, that raises money through an IPO. Investors will give them money and they have to raise the money through an IPO, acquire any private company and take it public. SPACs are also known as blank check companies, and how they work. SPACs are listed on a stock exchange. without any business operation. They don't have their own business. They are just formed for the performance of any specific criteria, for the fulfillment of any specific criteria. They raise capital through an IPO and then they have 2 years. That is 24 months to complete an acquisition. And if they don't do such work in within 24 months, they have to return the funds to the shareholders, those shareholders, sorry, investors who have provided them the. Now, which of the following statements about SPAC is incorrect? It is asking wrong. Which of the following statement? Tell me. Yes, correct, Anita ji. It is 2 years. See, if you will read this statement, it is written within 1 year. No, just now we have studied that within 2 years. Okay. So it is an entity. It is specifically set up with the objective of yes acquiring a target company. It raises money with IPO. Special purpose acquisition monies are known as blank check companies. So all these three statements are correct except the third one, which says that if it is not made within 1 year, no, within 2 years. Now, how does SPAC raise capital? Very easy, by issuing debt, IPO, by selling its all assets or equity financing. It is by selling equity through an IPO, initial public offer. What happens if a SPAC does not complete an acquisition within the time frame? The time frame is typically from 18 to 24 months. What they have to do if they have not completed the acquisition process within 24 months? They have to refund the money to the investors. Okay, the SPAC is dissolved and the investors are refunded their money. They have been given their money back. Yes, it is A. Now, what is the role of the SPAC's management team after IPO? After they raise this IPO, what does the SPAC do? Yes, they search for the private company to acquire. Okay, this is what their work is. They have to search the company, and if they don't get the proper company, they will not going to invest in such companies unless and until if they will get a good company, a good private company for the acquisition, who is ready for the acquisition, they will do that. Now, typical risk for investors in SPAC. Investors may lose their investment if no suitable acquisition is made within the time frame. And what is the time frame? That is 2 years. Okay, so they will lose their investment. Now again, these investors had to look for another investment, look for another company where they will invest, where they will go and invest their money. So it is the a full wastage of time for investors also, and for the company though, who has been formed a SPAC, the acquired company. Okay, because 2 years a bit long time period for investing, for waiting for the other company to get acquired, for further documentation. Okay, then the control, then they will decide who will going to control which portion. So it takes a lot of time. What benefit do investors receive if SPAC successfully acquires a private company. So what is the benefit they will get? So mainly the work of the investor is what? They invest in different companies with the intention of what? What is their ultimate intention? That is to get the ownership, to get the shares of that company, the equity shares of that company. Then only they will get the ownership. So they receive shares in the newly merged or acquired company immediately. Clear? Well, now, which of the following activities is not part of pre-deal preparation? Means when the deal is being prepared before it, the before time, before the deal has been prepared, before the deal preparation. With regard to life cycle of SPAC acquisition companies, identify lead investment, mergers and acquisition laws, develop forecasting model, story and evaluate your company's valuation. Yes, it is a conduct employee education and communication around the SPAC. Okay, so it is being asked that which one is the activity which does not take place before the preparation of the deal. So all the activities take place before the preparation of the deal, except this is after the preparation of the deal. After the deal preparation is done, the deal is being closed. Then, okay. So option D will be the correct answer. Clear? Chalo, let's move to the next question. Which of the following is an example of a hybrid technology? Yes, Siva, Sailu. Hello, good evening. Electric cars, solar panels, hybrid cars, combining electric and fuel powered engines of wind turbines. Tell me, hybrid technology means what? It is a combination of two technology. This is the meaning of hybrid, na combination. So hybrid cars, when it get combines with the electricity and fuel also. Clear? So it is being asked in the question the example of hybrid technology. So the cars which has the combination of both electric also and the fuel also. Which innovative hybrid has transformed the renewable energy sector? Tell me. The renewable energy means the energy which can be renewed, which can be made again and again. Yes, it is wind solar. So wind solar both are renewable form of energy hybrid power system. Okay. So it is asking geothermal only. The word only is there. It means it is alone. And we have seen that hybrid is what? It is a mixture of two elements, composition of two elements. Okay, so wind, solar, hybrid power system. Now, what is a FCCB? That is foreign currency convertible bond. Foreign currency convertible bond. There are two. One is a bond which is being converted, okay, converted into equity shares later on. A foreign currency means currency of any other country. So what is that? Yes, very nicely, Anita ji. Correct answer. Okay, you are giving me. Maximum correct answers. A bond issued in a foreign currency. Okay, a bond is being issued in where in the foreign currency means it is being issued in the foreign country as well, that can be converted into equity shares of the company issuing company. The bonds which you have issued, okay, in that issuing company, that bond has been converted later on into equity shares, and in which type of currency? That is in a foreign currency. So this is foreign currency convertible bonds. Which type of investors are most likely to purchase FCCBs? Basically, this is for foreign currency. It should be where? It should be in the foreign markets. So it is institutional investors, okay, in international markets or in foreign markets. So which type of investor will be most likely to purchase these foreign currency convertible bonds? Those who are those institutional investors who are issuing in the international markets. Okay. How FCCBs are different from traditional bonds? FCCBs are issued in the issuer's domestic currency. FCCBs have a fixed maturity and cannot be converted into equity. If there is a convertible bond, if there is a convertible bond, then how cannot they be converted into equity? They can be converted into equity. Now that is why it is written convertible bonds. And we have seen that convertible bonds are those bonds which can be converted into equity. So how FCCBs are different from traditional bonds? So this will not be the answer with the elimination method. You can eliminate this option. Okay. FCCBs allow bondholders to convert them into shares of the issuing company. FCCBs are not listed on stock exchanges. Is it so? FCCBs are convertible bonds, so they can be converted into shares of the issuing company, but in the foreign currency. Where so how FCCBs are different from traditional in several ways, including the currency. FCCBs are issued in a currency other than the issuer's home currency. If you are an Indian resident and if you are issuing FCCBs, then you need to issue at some other currency like in a foreign US, Euro, dollar, yen, okay, than the issuer's home currency apart from this currency. While traditional bonds are not that, okay, they need to issue in their home currency only. FCCBs can be converted into equity shares of the company. Okay, while the traditional old pattern bonds they cannot be converted unless and until they have been written convertible bonds in their articles of association, memorandum of association of the company. Now, FCCBs they carry risks such as risk of default. Okay, the currency exchange rate fluctuations, interest rate going high, down, issuer stock declining in value, market fluctuations. Traditional bonds are considered a safer investment than stocks because these are the bonds. Okay, if anybody has issue bond, so in return of that, that person is getting a proper interest. So it is a bit safer instrument than the stock market, and they have lower interest rate than the standard because they are a bit risky. They are a bit risky, so the interest rate will also be low. These standard bonds, they have a high profit margin, so their interest rate will also be higher. Clear? Now, in which currency are FCCBs usually issued? Tell me. A foreign currency often issued in dollar, euro, British pound sterling. Okay, option B will be the correct answer. Yes. Now, in an initial public offering, venture capitalists exit by how they exist, how they take a exit mode. What they do if they want to take a exit from that company, they will sell their shares in the stock market. Okay, and from that they will earn a huge returns. This is how they make a profit. In similar type of, again, in another company they will enter, they will work, they will improve, expand the company, they will purchase the that company, and after that they will sell their equity on the stock market. Clear? This is how they perform in every company. Which type of funding is most commonly sought during the idea phase? During the idea phase means the product is not prepared. Okay, the business model is not developed properly. It is not developed. It is in under developing. Only the idea has been made. Okay, I have a thought in my mind that um I will do this kind of business. Okay, I'm going to have this type of startup related to this kind of product. Idea phase. Which type of funding we use in the idea phase? That is angel investment. Okay, the angel investors, they provide fund for the seed funding. We have seen now. Or bootstrapping. Bootstrapping is what? Your self finance, means your personal savings, because in the initial stage nobody will give you a lot of money. Your personal savings. What is the primary use of funds during the idea phase? For the idea phase we use fund, and for such thing where we use those kind of fund, in which type of activity we use such funds. I have an idea in my mind. Okay, how to implement that idea into the actual product, how to transform that into the actual product. Back in the back end, what type of functionings you will perform? Yes, for you will do R&D related to that product, that whether it is working or not, whether the product is fulfilling the needs of the customers or not. The prototyping, okay, the prototype of the product, the basic design of the product, and validating the idea. Is your idea working or not? Okay, it's not that the any other person has already made that product. Okay, and you are at your initial stage, so it will be a bit difficult for you. You need to put more effort on this. You need to redesign that. You need to give different ideas, innovations you have to do if you want to develop such kind of product which already has its existence in the market. Okay, so during the idea phase we need funds for R&D and D and for all these operations. Now, how many SDGs are there? Tell me. Sustainable development goals. We have total 17 sustainable development goals. So, what is sustainable development? The 17 global sustainable development are a part of 2030. Means these 17 goals have to be achieved by the year 2030. Okay, and what was the you can say, what was the theme? Okay, the transforming our world agenda. Okay, transforming our world. This was the theme of SDGs. Actually, this is the theme of SDGs, because right now, till now, if we will not complete achieve by 2030, okay, so we have few more years left to achieve all the 17 goals by the year 2030. So these have been built on Millennium Development Goals. In MDGs, okay, see, these are just for your extra reference. Okay, MDGs, they we are having 8 goals, and when the MDGs has been established, Millennium Development Goals, within the time period we have completed all these goals. We have achieved all the goals. So by making keeping this as an inspiration, okay, we have again set our 17 SDGs which we need to achieve by 2030. And let's see till 2030 how many goals we can achieve. So these are the 17 goals. Okay, read it. I'm giving you 1 minute time. Read it in all these 17 goals. And this is the image regarding to all the goals. Okay, should I move forward? Chalo. Now, which SDG aims to ensure health, lives, and promote well-being for all at all ages? Ensure healthy life. That is well-being. It is the third goal. Clear? Now, what is the target year for achieving sustainable development goals? Just now we have seen the target year 2025, 2030, 40 or 50. So it is by 2030 we have to achieve all 17 goals of SDGs. Clear? Sure. What is pipe in the context of SPACs? Pipe. Private investment in public equity used to raise additional funds, tax benefit, regulatory body for SPAC, or a mechanism to liquidate the SPAC shares. So it is a private investment, okay, in public equity. For acquisition, okay, when you have not sufficient amount, okay, when SPACs are does not have a sufficient amount, the investors have not invested the sufficient amount for the purchase of acquisition. See, when having an acquisition, when you are acquiring any company, okay, there is a proper negotiation done. One will say, suppose A is saying that I will acquire your company with a value of 20 crores. Okay, the worth rupees 20 crore. But B is saying no. You have to, what if you want to acquire me, then you need to pay at least 24 crore. Means 4 crore more you have to pay. Then they will have a discussion. Okay, they will have a negotiation between these two. So if investors has not granted a proper amount for the acquisition, okay, so this fact they need some additional funds for acquiring the target company. So this private investment in public equity, they are used to raise additional funds for the acquisition process so that the process may get completed. So this is the use of pipe in the context of SPACs. Option A will be the correct answer. Clear? Sure. Now next question. Which of the following is an example of a environmental factor in ESG? Environmental factor. Yes, it is carbon emission. So it relates to ESG. It relates to E. Employee satisfaction comes under where it relates to social. And what is governance under this? Corporate governance policy. Okay, so this is related to environmental factor. Now we have two, three more questions. Okay, stay connected with us. Why is ESG important for investors? ESG, environmental, social, and governance. Why it is important for investors? It is because to assess the long-term risk and sustainability of investment. Okay, the risk which are coming into our way. Okay, in order to get a sustainable project, so we need to assess those long-term risks, and if any risk arises, we need to minimize those risks by proper methods and sustainability of investment. Clear? So option C will be the correct answer. Which organization is known for providing ESG ratings? We have a ratings on different phases. Okay, so which organization is responsible for this? World Bank, MSCI, IMF, a group of seven countries. IMF is International Monetary Fund. Tell me if anybody knows. It is MSCI. Okay, so this organization is basically known for providing the ratings related to ESG. Now, what is MSCI? It is a Morgan Stanley Capital International, and it is a firm, a business unit that provides ESG ratings and research for investors and company. So this ESG ratings are in the format of this triple C, B, double B, triple B, A, double A, triple A. Okay, it is in the format of this. A1 is a good one. B1 comes under the middle level. Okay, and C is a bit poor. Clear? So this A is what a leader, a company leading its industry in managing the most significant ESG risk and opportunities. B is average. Okay, in the middle it is B, it is average. A, triple B, and double B. A company with a mix of both exceptional and exceptional track means it is a mix of both risk plus profit. Okay, record of managing the most significant ESG risk and opportunities, and these are laggard. The triple C and B, a single B, means the one which is having more alphabets, triple A, double A. So these are termed as very good. Learn in this way. Okay, the one which is having a few alphabets like a single A, triple B, and double B. Okay, so this is on an average, it is a not bad, not good, but those who are having at last position C and B, so these are laggard. Okay, lacking its industry based on its high exposure and failure to combat all these ESG risks. Clear? So these are the rating scales. Done? Okay. To clear this one, MSCI, it is a Morgan Stanley Capital International agency that provides ratings of ESG. Now, last question of today. What is the triple bottom line in ESG often referred to as? Triple bottom line. That is profit, people, and planet. Okay. It is the triple bottom line in environmental, social, and governance. Done? So, yes, we have done our 74 questions today. So, please, everybody, before leaving this session, please like the session, share it with others as well. And I hope you have enjoyed the session. You like the questions and everything. The concept is being revised. My intention is not to complete the whole field 74 questions, but the concept which you have already studied earlier, so those concepts may get revised. Okay? So this is my ultimate aim. So I hope everybody have enjoyed the session. So we have completed the marathon sessions of all the modules from A to D today, and tomorrow we are starting with our the final marathon series, and it will start from 6 p.m. only because we have to take this to the 5 6 hours. So module A and B, tomorrow we will try to complete this module A and B. Okay, no matter how much time it takes, we will be completing the whole A and B. And most of the questions I uh, make you all to practice in our module B series. Okay, so in tomorrow's session, we are also having some few questions, okay, related to leverage, related to capital budgeting, and the whole of the module A from basics of management to controlling. So make sure you all join by 6 p.m. tomorrow, okay? Share it with others so that more and more of you join because day after tomorrow you are having a paper, okay? So be ready for that tomorrow and day after tomorrow. On 8th of December, you are having a paper. So yes, before leaving this session, I highly request you to please like the session and subscribe the channel. Okay. So take care everyone. Very good night to all of you. Keep studying, keep watching. Okay. Let's meet tomorrow at 6 p.m. Continuously till 11 or 12 p.m. So yes, I'm ending this session. Okay. Take good care of yourselves. Bye bye everyone and a very good night to all of you.